Hello guys, I'm Paras the Options Guy and welcome to the No BS Trading Podcast. This is episode number 17 of the podcast, and today I'm going to talk about first of all the historic interest rate decision that came out in the previous week and what are the implications of the interest rate decision that the Fed took. What are the future consequences that are going to come into the market and how will the market react to it in the coming future, and also what is the Fed expecting in the coming future. How are the interest rates going to move in the coming couple of years, or you can say in the coming few months. And I'm also going to talk about if this was actually a right decision by the Fed, because the market is pretty divided. So we're going to talk about that in just a few minutes. But then I'm also going to talk about what are the major data points that you should keep in mind for the next week, which can affect the markets. And then we are also going to talk about the two new IPOs that are coming in the Indian markets and should you apply to them or not. And then in the end, I'm also going to talk about how the market can move on a technical basis for the next week so that you can plan your trades accordingly. So without any further delay, let's just start with the episode. So first, let's talk about what happened in the previous week and what are the major events that happened. And as you know, the major event that happened previous week, which you would have probably heard if you're not living under the rock, is the Fed interest rate decision. And the Fed cut the interest rates by 50 basis points. Now, the thing is that a lot of people are divided. Was a 50 basis point cut actually needed or was it not needed? So I'm going to talk about that shortly, but I'm also going to first of all talk about a few highlights that that were sort of important and that should not be ignored. So one highlight is that the Fed sees two more 25 basis point cut in this year itself. So there is the November and the December meeting which is still remaining, in which the Fed sees two more rate cuts of 25 basis points. So that means 0.5% cut in interest rates in this year alone. Okay, and after that, if you see, in 2025, the Fed sees a total of 100 basis points of rate cut, and in 2026, the Fed sees a total of 75 basis points of rate cut. Now, the thing over here is that this is a little bit more than what was previously forecasted by the Fed's members. So that means now the Fed is expecting that they will need to cut rates a little bit more in the future. And this was one of the reasons why the market has reacted positively after the Fed's interest rate cut. So that is one thing. Another thing is that after, since 2005, no Fed governor, no member of the Federal Reserve actually sort of, you can say, was against the moves of the Fed, right? Everybody was in, you can say, consensus that the Fed, that whatever the Fed was doing was right. But after 2005, for the first time, a Fed governor had dissented from the decision of cutting rates by 50 basis points. And by dissented, I mean they were against the action that the Fed was taking, that is cutting rates by 50 basis points. And that was Michelle Bowman. She was actually, she wanted the Fed to cut rates by 25 basis points and she was against a 50 basis points cut. So that is one thing that even in the Fed, in the whole federal committee itself, a lot, it looks like things are trying to, some people are divided, but still this is just one single dissent and not like half of the people were against the against the rate cut. But still, something that you should keep in mind. Another thing is that now these are some of the comments that Powell had given in the press conference, and that is, the Fed believes that the economy is very strong. And please, all of the next few points that I'm going to tell you right now are important. So just think about them when I'm telling you. The Fed believes that the economy is very strong. The Fed also believes that the growing also has growing confidence that the strength in labor market is maintained. Okay, and the Fed also believes that the consumer sentiment remains resilient. The consumer spending sentiment remains resilient. All of these points, what do they indicate? The simple answer is that the economy is strong, right? There is no need to worry about a slowdown or anything. So then the question becomes that, why did the Fed cut rates by 50 basis points and not 25, and not just 25 basis points? What was that need for that extra 25 basis points? What was the need for a rate cut at the first place when the economy is doing so well? And you could say that, okay, a 25 basis point rate cut was needed because the unemployment is slightly creeping higher and the job market is cooling down and all that stuff. So it is understandable that a 25 basis point cut should be there. But what was the reason for a 50 basis point cut rather than a 25 basis point cut? Why was the Fed so in a hurry? Why did the Fed cut rates aggressively? And the simple answer is, and what we've also been talking about in the podcast for basically since the start, is that it looks like the economy is heading somewhere which is not really desirable for the Fed. And as I said, and as I've shown you a lot of times, um, in many charts, in many different places, in many different data points throughout various episodes, is that there are a lot of signs that the US economy is going to slow down and is going to enter into a nasty period. Be it unemployment. As I said, that unemployment has crossed its 36-month average, which means a spike is coming in the unemployment. And a lot of other things like the consumer sentiment, which is not as good as the Fed says it. And I think the Fed also knows that, but they are pretending that everything is fine. And so what I believe is that the Fed knows that the economy is going to go into some deep problems in the near future, because of which they are trying to cut rates very aggressively. And sure, they say that they are just going to do a 25 basis point cut in the next 2 months, but who knows, maybe they again they get some sort of a data point or some sort of a justification to again do a 50 basis point cut. But you need to understand what is the signal that the Fed is giving, which the signal that is sort of not on the face of it, the intrinsic signal. What is the Fed saying by doing a 50 basis point cut? They are contradicting their own views. Their view was that the economy is very strong, the labor market, strength in the labor market will be maintained, the consumer spending is resilient. So why do you aggressively cut rates? Okay. And the one more thing is that the core inflation is not coming down. Okay. Core inflation, super core inflation, all of these inflation points are not coming down, and inflation is actually much higher in many other services or many other goods of the economy, which is not really being shown by the actual CPI numbers, right? So why cut rates at this point? You really need to ask yourself what's the reason for that. And as I said, that Fed is trying to avoid a recession or avoid any sort of economic downturn. But you have to understand one more thing, is that when the Fed cuts rates, right, the effect of the rate cut is not immediate. Like today, if the Fed cut rates, it won't be that tomorrow the GDP comes out like double what it was growing at, right? So the GDP, so the thing is that it takes 12 to 18 months on an average for the Fed's decisions to come into effect, right? So if the Fed is cutting rates now, you will not see the effects right now. You will see the effects in after 12 to 18 months. So that means even if in the near future the economy starts to go down, the Fed's rate cuts will not do anything. They might just spark a sort of, you can say, they might just spark some sort of a rally in the market, but that will be a short-lived rally. Okay. So in the end, even if the Fed starts to cut rates, even if the Fed has started to cut rates this week and they will continue to do so, the thing is that the effect of those rate cuts will not be very fast. So that is one thing, and the only event that happened in the last week. But again, that event has said a lot of things and has changed a lot of things in the market, and I'm going to talk about that more in the coming few episodes of the podcast also. And as as we go forward with many other data points coming and how is the market looking, I'm also going to talk about how is this going to affect the markets on a technical basis. So yeah, that was it for previous week. Now let's talk about what are the major events that are coming in the next week that you should not avoid and definitely give a little bit of attention to. Now talking about the events that are going to come in the next week, which are going to which are going to be important for you. And the first of all, the first event that we have is on Thursday itself, and that is the US GDP data. And the expectations are that the GDP will grow by 3%. But you need to keep in mind that if the GDP is very strong, okay, and the GDP, let's say, somehow comes out above 3%, then this will actually create a sell-off in the market. Why am I saying so? Is because if the GDP is very strong and the Fed has cut rate by 50 basis points, so a lot of people will think that the Fed's rate cut was overdone and maybe the Fed has made a mistake over here, because of which the markets can also react negatively. So keep that in mind. Don't get carried away if the GDP comes out very strong thinking that the market will rocket from here and all that stuff. Maybe the short-term reaction, the very short-term reaction might be that the markets rally, but in the subsequent reaction can be negative over there also. But if the US GDP data does come out a bit more negative also, even then you're looking at not a great reaction from the markets. But still, the expectations are 3%. If it comes out somewhere near that itself, 2.8, 2.9, 3.1, all that stuff, it will not really matter so much. And on the same day, we also have a speech from Mr. Jerome Powell, and this speech, okay, if you listen to it, it will sort of be important, because Jerome Powell, he can mention some things that he didn't mention in the press conference last week. He can mention maybe some sort of another thing which can be very important, like maybe what the Fed is thinking about doing in the coming future, in the near future, how the Fed is expecting, what expectations the Fed has about a recession. Although they've already said that the economy is strong, so I don't think they are thinking about a recession and all that stuff. But yeah, all that stuff, if Jerome Powell says something important, then we'll definitely discuss in the next week's episode, and I'm going to tell you about it. But yes, after that, on Friday we have the PCE price index and the core PCE price index. The PCE price index, core PCE price index, all of these will be very important. If the PCE price index, keep this in mind, the previous reading of the PCE price index showed that the PCE inflation, you can say, is at 2.5%. And what PCE inflation is that personal consumption expenditure. This is the full form of PCE. Okay, so it is sort of similar to the inflation reading in the CPI inflation reading. Okay, so now the previous time PCE inflation came out at 2.5%. So if we do not see any sort of a sizable reduction in PCE and core PCE price index, this will be a problem for the markets, because as I said that the Fed has cut rates by 50 basis points. That means they are also expecting that inflation will cool off in the near future and it will be sort of going down, right, as time passes. But if that does not happen, then that is a problem for the Fed, because now they've cut rates and inflation can spark again. So that's why keep the PCE inflation and core PCE inflation numbers in mind, and they will come out on Friday. If they come out higher than expected, or even at whatever the previous readings were, that is 2.5% and 2.6% for PCE and core PCE numbers respectively, then this will be sort of negative for the markets. But if they come out lower than expected or lower than the previous numbers, maybe PCE price index comes out at 2.4, 2.3%, then this is good for the markets. So that is it for the major events that you should keep in mind for the next week. And now let's move on to the two new IPOs that are coming in our markets for the next week, and should you apply to them or not. Now, the two IPOs that are coming in our markets next week are Manba Finance Limited and KRN Heat Exchangers and Refrigerators Limited. So, we are going to talk about both of them. First of all, let's talk about Manba Finance Limited. Okay, so this is a 150 crore IPO, out of which all of this will go to the company. So, no promoter selling their stake or anything. Okay, and the company, what this does, we will get to that, but first let's talk about, should you apply to this IPO for listing gains? Is it a good IPO if you only want listing gains? And the answer is yes, because the gray market premium is going on at 50%. That means the listing gains are expected to be around 50%. So any sort of listing gain above 40% is good according to me, and any sort of gray market premium above 40% is good according to me. So definitely you can apply to this IPO if you want to apply just for the listing gains. This is a good IPO for that. But now let's talk about what this company does, and should you apply to this, should you invest in this company for the long run? So this company, what this does is that it is an NBFC which lends loans for two-wheelers, three-wheelers, electric vehicles, two-wheeler purchases, three-wheeler purchases, as I said, used car purchases, small business loans, and also personal loans. So if you would have gone to, let's say, buy a new bike, right, or any sort of a new EV bike in a showroom, these guys, the people from Manba Finance, I've seen that they wait over there, and when, let's say, you say that I want to buy it on EMI, these guys are the ones who will provide you with the EMI, right, who will provide you with the EMI services. So basically, these are the people who will provide you with the loan to buy those two-wheelers, three-wheelers, as I said, or EV vehicles, used cars also, and all that stuff, right? So this company mainly focuses on employees and self-employed people, not the businessmen. It mainly focuses on employees and self-employed people who do not have a business per se. So let's talk about the revenues and the net profit and how the financials have been doing. So if you see, revenues have gone from 106 crores in 2022 to 191 crores in 2024 in FY24. So a very good revenue jump, almost a 2x revenue jump over here. At the same time, the profit after tax has gone from 9.7 crores in 2022 all the way up to 31 crores in 2024. So the profit after tax is increasing at a much faster pace as compared to the revenues, which is again a very good thing, indicating that the company's net profit margins and also net interest margins are improving pretty well. Okay, so this is one of the things which is good about the company, and the revenue, the whole financial situation does look very good for the company. So what this company will be using the 150 crores that it is raising is, it is going to use it for capital requirement, for meeting the capital requirements. And what this will enable the company to do is push much faster, push its loans to a much you can say to much more people, because now it has capital, more capital. That means now it can also lend out more loans against that capital. So the company, as I said, very good financials for the company, very good growth also, and I think the company will continue to grow at a very similar pace, maybe even at a faster pace, because the two-wheeler segment, okay, is one of the segments which is very which is very good in India. Okay, the two-wheeler segment is one of the, you can say, India is one of the biggest players in the two-wheeler segment all over the world, right? So the company has a very wide market to capture. So the growth potential is very good for the company, and since they've entered into the used car market also, it is again opening up new doors for expansion for the company. So yes, again, you cannot capture everything just like instantly. You have to work a lot, but still, the company has a very big market that it can definitely capture. And now another thing which is happening with the two-wheeler and three-wheeler segment is that people are buying more expensive vehicles, and especially in the two-wheeler, you can say bike segments, people are now moving towards the premium. They will start buying bikes which are, let's say, 250cc, 300cc, 400cc, all these bikes. And what this will does is that the company can now lend out bit more bigger loans. That means the business of the company can improve, can also grow very healthily from here. So again, uh, sure, you can say that there are a lot of risks also involved, and I agree the risks are involved. But as of now, if you see, the company is not looking like it is, lending out loans to everyone without, with carelessness. They are definitely, I think, very careful, and they will definitely, I think, keep this carefulness in the coming future also. Okay, so that is one thing. Okay, another thing is that, the pricing of the issue is also not terrible at all. The pricing is also good. Again, it is not very attractively priced also, but it is not very expensively priced also. Post IPO, the P of the the P of the company looks at 19.9. So post IPO, by post IPO I mean at, at 120 rupees per share, the P of the company will be 19.9. If it opens 50% higher, then definitely it is an expensive company and you should stay away. But if you're applying for the IPO and you get the shares, definitely this is one of those companies that can be held for the long run, and it can provide a very good growth, and the company can definitely be one of those good companies in your portfolio that can provide you with good returns. Okay, so that is it for Manba Finance. Definitely you can apply if you want to invest. But now let's move on to KRN Heat Exchangers and Refrigeration Limited IPO. So by the name itself, you would have understand what it is. This company makes heat exchangers and also refrigeration, you can say, solutions. Okay, so in the AC, right, you have an outer unit, right, which sort of cools the air. So you can say the company makes those fin tubes, pipes, and all that stuff which goes inside the, you can say, goes inside the outer unit of an AC. Or another thing is that the company also makes the, you can say, the radiators for the for fridges, right? In the back of the fridge there are sort of those heat exchangers, right, which will remove the heat and cool up the air. So the company makes those things also. And you get the point, right? The company makes all of these coils and water coils or heat exchangers and all that stuff which are used for cooling purposes or heat transfer purposes in machines, you can say, or in various many scenarios, right? So I hope you guys understood what this is. I will not go into too much of technical stuff, but this company is raising 340 crores, and all of this is fresh issue. That means all of this 340 crores will go to the company and nothing will go to the promoters. So promoters are not selling their shares. So first of all, let's talk about, is the company good enough for you to apply for listing gains? Should you apply to this IPO for listing gains? And the answer is yes, you can definitely apply to this IPO for listing gains, because the as of now the gray market premium is going on at 101%. So a very good listing gain is expected from this IPO. So definitely you can apply to this IPO for the listing gains, no problem at all. So after that, let's talk about how does the company's financials look. Okay, so in FY22, the company made a revenue of 158 crores, and in FY23, the revenue has jumped all the way up to 313 crores. So basically, the revenue has doubled. That means a very good growth, similar to what also happened in Manba Finance. Okay, and another thing is that profit after tax has gone from 10.5 crores in FY22 all the way up to 390 crores. Okay, and in FY23 this was at 32 crores. So there is definitely a exceptional item over here. The company, I don't think, has increased its profit by 10x just by just by you can say just by its revenues, because the revenue itself is 313 crores. So there is definitely an exceptional item which I cannot find as of now, but still I think in the growth in the revenues and profit after tax all is fine, and it is a good growth company, very good growth company. ROE is at 40.8%, very high. ROCE is at 31.2%, again very high. So one thing that you need to keep in mind is the AC revolution that is happening in India. Now you'll be like, what is this AC revolution? So you see, a few years back, you know, everyone was fitting up ceiling fans in India, right? Every home wanted a ceiling fan. Like a few years back, no, but still, over the years, right? Let's say in 2000s and all that stuff, people didn't have ceiling fans, right? A lot of homes didn't have ceiling fans, but then it became a necessity that you have to have a ceiling fan in your home, right? And a lot of people started buying ceiling fans, right? And this was sort of the ceiling fan revolution of India, right? Where every home had to have a ceiling fan, right? But now this revolution is happening with ACs, where every home wants an AC. And this is one of the things that is very good for the company, because its clients are, it has many big clients like Blue Star, right? Blue Star ACs, if you would have understood, Daikin air conditioning, and all that stuff, right? It has many sort of, you can say, blue chip clients, or big, you can say big clients which are big into air conditioning, right? And the company also exports a lot in UAE, USA, exports a good amount in UAE, USA, Italy, and all these companies, right? So the exports are also pretty good. And so this is one of the things which is very good for the company, is that there is a very good demand still waiting in India itself, which can definitely help the company to grow at a very good rate in the coming future. So the future prospects of the company look pretty good. And the revenues, the way the company has increased its you can say the way the company has grown in the past few years is also pretty good, pretty remarkable for a company which makes heat exchangers and refrigeration solutions. So I'm really impressed with that. So the issue also appears to be pretty okayish. Okay, I mean, by issue I mean the pricing of the IPO also appears to be pretty okay. Post IPO the PE will be at 33.5, which is, yes, a bit on the expensive side, but still not very very bad. Okay, it is good enough, but not very very bad. I mean, it's not very very bad, but it, again, as I said, same thing with Manba Finance also, that it is not very bad also, but it is not very good also. So that is one thing. Okay, so now, should you apply to this IPO? Should you invest? Yes, you can definitely invest for the next 5 to 7 years. This company is a very good company that you can definitely look out to invest in. So these are the two IPOs that are coming in our markets for next week. Now let's move on to the market analysis for next week and how the markets can move on a technical basis. So if we see this week, Bank Nifty moving up 3.5%, just an amazing rally, and Nifty moving up 1.7%. And this was mostly because of the Fed's interest rate decision, but not even the Fed interest rate decision, but rather the forecast that those guys have given, that there will be lower rates, because of which the markets have rejoiced. And yes, I had said in the previous week that in the second half of the week, we will definitely take a short position if the market does allow that. But the data was telling us something else, because on Thursday night I had posted this on my LinkedIn, where the option chain was showing very strong bullishness. And if you would have so definitely do follow me on LinkedIn, and if you would have definitely looked at these data points, you would have not said that the market will be going bearish. So definitely do follow me on LinkedIn, because I post many such good things on LinkedIn and many such informative things which can definitely help you. But after that, let's talk about what the markets are going to do, because now if you see, Bank Nifty has touched a new all-time high today, and I also did try to take a long position. It was in very good profits, but markets came back down, hit my trailing stop loss, and then recovered completely. So very frustrating, frustrating day, but can't do anything. But yes, now if we see Bank Nifty has touched a new all-time high, so we will not go short on the market, thinking that the market has run up a lot and all that stuff. Now it will not go up again. Okay. And Bank Nifty also over here making a very good candle, and in the weekly charts Nifty also looking pretty bullish. So the next target first of all for Nifty is 26,000 on the upside. Until then, so now the next target is 26,000, pretty small target, right? But if we capture 26,000, or you can say go about 26,000 and stay above there, then we are looking at 26,500 on the upside. That will be the next target. Okay. So until and unless in Nifty, first of all, we go below 25,300. Okay. 25,300 will be the level that you need to watch out for. If we, until and unless we close below 25,300, we will not go bearish as of now. Okay. 25,300 is the level. And for Bank Nifty, the level that below which we will go bearish is 53,000. If we go and close below 53,000 firmly, that is when we will go bearish on Bank Nifty, because then this will be sort of, you can say, a breakout failure, and Bank Nifty then can give a good correction from there. But yes, and in Nifty, that will be 25,300. Okay. Below 25,300, Nifty will also sort of, you can say, give a breakout failure, after which we can easily see another 500 points of move and then some sort of a correction more also. So these two levels, until unless these two levels are held, we will not go bearish on the market. Rather, we will think about taking a buying on dip stance wherever we get the chance to. Okay. So Bank Nifty over here, very simple, 53,600 to 53,400. This 200 point zone will be a very good area to take a long position. I'm giving a very big zone because over here markets can be volatile, and so you have to give a bit of a very big zone. Some sort of a candle like this can also be made in Bank Nifty, and because of which your stop loss might get it. So that's why I'm giving a 200 point zone. In this zone, wherever you see that the market has started to make positive price action, you can go ahead and take a bullish trade. And for Nifty, that zone will be 25,000, 20, just a second. Yes, 25,650 to 25,600. In this area, you can go ahead and take a long position in the markets. It can also be till 25, it can also be 25,720 to 680. That is also a very good support. So what you need to do is look at the price action in these zones. First of all, 25,720 to 680. This zone is a very good zone where you can take a long position. And then if that zone breaks, then you have 25,650 to 25,000, you can say 600 on the downside, which will act as a good support. If that breaks, if this zone at lower levels also breaks, then maybe Nifty might consolidate for a couple of days and then start to move. But as of now, taking a buying on dip stance will be the best thing to do. But the one thing that you should keep in mind is that keep trailing your targets, or you can say keep trailing your stop losses. Actually, not targets, I'm sorry. Keep trailing your stop losses, because spikes like these can hit your stop loss and then basically take away all of your profit. Okay. So keep trailing your stop losses or keep booking your profits as the market is going up. Don't think that the market will just continue to move up all the time. Okay. Because if you see, Bank Nifty has given a very straight rally from 50,400 to 53,800. So that's why it is better to stay a little bit cautious and not just completely go crazy with your bullish sentiment. Okay. So that is it for the markets. Now for Bank Nifty, one thing also is that if we go above 54,000, 55,000 will also be pretty easy. Okay. So if we stay above 54,000, then we can see a very good rally till 55,000 also without any problems at all. Okay. So that is it for Bank Nifty. That is it for the market analysis for the next week. But again, things can change very fast in markets. Okay. So do watch my daily analysis video and you will get to know what can happen, what are the changes that happened every day, and what should you do on the next day. So yeah guys, that was it for this week, and thank you very much for watching till the end. I really appreciate that you waited till the end. And again, I hope you guys understood something new from this episode. I hope you guys got some new insight. I hope you can take away some new knowledge from this episode, and I hope I didn't waste your time. But yeah, with this, I conclude this week's episode, and I will see you guys in another week with another episode with some new news again. But yeah, Bye bye. Have a great week ahead, and I'll see you in the next week.